Good afternoon, and thank you for joining us today for a workshop on submitting the 2025 annual or Q1 2025 Project and Expenditure Report, or P&E report for the State and Local Fiscal Recovery Funds program. We'll start today's call shortly, but before we begin, I wanted to do a little bit of housekeeping. So as you join the meeting, please use the chat to introduce yourselves. For example, you could include your name, your role, and the communities that you serve. We appreciate that many of you are coming with questions and have submitted some of those in advance. Our team has come prepared to answer many of those questions live during this presentation. Please use the Q&A box to ask your questions and feel free to include as much detail as necessary for us to provide a sufficient response. As you have questions throughout the session, please use the Q&A function. We will shortly turn off the chat function to create space for the resources that we'll provide during this session. Finally, we will get started in just a few moments. Thank you. Good afternoon, everyone. Thank you again for joining our session today. As you can see, some of your peers have already begun to introduce themselves in the chat. So as you join the call, please take a moment to introduce yourselves there as well. For example, you could include your name, your role, and the communities that you serve. Later on in the presentation, my colleague will provide a demonstration of the portal to walk through the content and common reporting errors. So we would like you to take a moment now to log into the Treasury portal so you can follow along during the demonstration and submit your technical questions as you have them. If you're having account access issues, please send an email now to SLFRF@treasury.gov with an explanation of the issue. You can use the template that we will provide in the chat. Please note that the lack of any one of those details, such as UEI, contact information, EIN, will result in a delay of account creation or linkage or resolution of some of your other issues. We'll attempt to resolve your account access issues as soon as possible. I am now going to hand it off to the SLFRF Program Director, Vero Soto, to kick us off today. Thank you.
Thank you, James. Good afternoon or good morning, everyone. My name is Vero Soto, and I am very pleased that you are joining this workshop on submitting your 2025 annual or Q1 Project and Expenditure report, or the P&E report, for the State and Local Fiscal Recovery Funds program, or SLFRF program. You can see the specific topics we're going to cover on the agenda slide in front of you. And now we are aware that you and others may have other questions beyond reporting and compliance, and we want to be clear that we will not be responding to questions beyond the focus of this webinar and the program. And with that, thank you for sending in many questions. Our team is prepared to answer as many of them as we can as this webinar goes on. So please use the Q&A function to submit those questions, and our team will be able to respond when possible. And in particular, we do have some support here for portal-related and technical questions. So please take a moment to log into the Treasury reporting portal so that you can follow along during the demonstration. And if you have technical issues with that, you can submit your questions as you have them. So the State and Local Fiscal Recovery Funds Program, or SLFRF program, is a part of the American Rescue Plan, and it delivered $350 billion to state, local, territorial, and tribal governments across the country. Through SLFRF, over 30,000 recipient governments are investing these funds to address the unique needs of their local communities by using these funds for eligible uses. While we're not going to cover eligible uses or offer more program background or any other recent updates to date, linked in the chat are going to be resource guides that will help you learn more about the SLFRF program and those eligible uses. Again, we really want to stay focused on reporting compliance, so thank you for allowing us the opportunity to do so. So today's agenda is focused on helping you to prepare the 2025 annual or your Q1 quarterly reports. And you know those are due today. And so the first thing we'll do is we're going to review some of the key content for the P&E report that is due today and address common reporting errors. Then we're going to go over the non-compliance process and the process for debt collection. Finally, we're going to review what we have discussed and offer some helpful resources. We will also go over some of the questions that we have received directly from you, our recipients. So now I want to thank you for introducing yourselves to your peers in the chat. And at this time, we're going to close the chat so that we can continue to share materials that will give you quick access to key resources that you can use. So please utilize the Q&A function in Zoom for the questions you have. We have a small but mighty team who will be answering your questions in the Q&A box live during this webinar. Again, we're going to address questions regarding the program, reporting and compliance in the Q&A box, and we may not be able to answer questions beyond these program-specific ones. Now I'm going to turn it back over to James to provide a quick poll related to the SLFRF program. Thank you for joining us.
Thank you, Vero. You should see the poll questions pop up on your screen in just a moment. There are 3 questions. The first is to gauge your level of confidence in submitting your report by today. The second is a question related to when the report is due, which I hope you know the answer to. And the third is if you need to submit a report, even if you've expended all of your funds. So please take about another minute to respond to those questions, and we'll move on with the presentation. I can see that most of you all have responded to the question, so we're going to end the poll now, and you should see the results pop up on your screen shortly. So for our first question, we can see that the majority of responses fell in between not at all and moderately. Most of you, around 40% of you responded moderately. We're hopeful that between the resources that we provide in our demonstration later in this webinar, we can boost your confidence and your knowledge by providing you with the right tools and the quick tips to successfully file your annual project and expenditure report. In addition, we'll post links to the online resources mentioned during this webinar in the chat section as we go along. Once the webinar has concluded, you can refer to all of those resources on a page on our homepage, which is a compilation of those resources, including a similar recorded demonstration and a similar recorded webinar. You can find that link to the compiled resources on our homepage, and if you scroll down to the news and program updates section, the link to webinar follow-up materials will bring you to the page with those compiled resources. Now, for our second question, when is the 2025 annual or Q1 2025 SLFRF report due? So we can see that the majority of you thought correctly that today is actually the deadline. April 30th, 2025 is when the report is due. For our third and final question, we can see that the majority of you responded correctly. Yes, you do need to submit a report even if you've expended all of your SLFRF funds, and you'll need to continue to do so until award closeout is initiated in the portal. So thanks again for providing some responses to that poll. We'll move along with the presentation now, and I'd like to provide a quick account access and reporting how-to guide. If we could, I'll have my colleague post a link in the chat for a more comprehensive resource that you can review, and then we'll give a reporting overview of reporting responsibilities and resources. So for those of you who may be in new roles or reporting for the first time, we wanted to take a few minutes to quickly orient you on how to ensure access and enter into the portal, along with some commonly seen errors. Let's begin with our step-by-step how-to report guide. Step 1 here is establish a login.gov account. So to start, all users must be registered with login.gov or id.me before they can access Treasury's portal. Today, we'll focus on the login.gov account approach. This, what you see on your screen, is what the login.gov screen looks like and where you'll sign up for a new account. I'll note here that it's very important to ensure that the email you use for the login.gov account is the same email you'll use to enter into the Treasury portal. Step 2 is using that login.gov ID that you created in step 1 to enter into the portal. So to gain access to your governance report, you need to first ensure that you have a login.gov account, and once that is created, the portal will then ask you to verify the postal code along with the account identifier in order for you to have the right reporting roles associated with your login.gov account. Step 3 here is to navigate from the landing page to the reporting tab to enter your 2025 information by selecting the Go to Your Reports or Compliance Reports hyperlink on the left-hand panel to be taken to a list of options for the programs you have access to under the Report Selection section. Now, to begin completing a specific report, click on Provide Information for the given report. At this time, you can select the SLFRF Project and Expenditure Report for 2025. You can click the blue pencil icon to access your report template and enter reporting information. And I'll note here that only the 2025 report is available to modify. Any prior year's submitted report can be viewed or downloaded as a PDF file. Administratively closed reports are those Treasury closed because they were not submitted by the respective report deadline. I'll also note that reports are cumulative, so you can input the most current and correct information in the most recent report, which is the 2025 report, as modifications to previously submitted reports are not eligible to be reopened. Step 4 is to enter the data and ensure accuracy. To begin completing a specific report, again, click on Provide Information for that given report and refer to the reporting guidance for details about each type of required report for submitted. The navigation bar on the left side of Treasury's portal will allow you to move freely between the screens. A quick note on bulk uploads. While you navigate through Treasury's portal and submit required information, users may have the option of manually entering data directly into Treasury's portal or providing information via bulk upload that includes all relevant information in a Treasury approved process and format. I will note also that bulk uploads are not required and you can manually enter the data if you choose to do so. On the project overview page, there is a lock icon located on the right of the screen on the project line. If the project on that line shows a completed status and the total obligation and total expenditures are at 100%, the lock icon can usually be selected. Now, locking the project is not a requirement, so you can still submit your report without the projects being locked. For more information about locking projects with a completed status, you can see page 33 through 34 of the Project and Expenditure Report User Guide. The system will also let you know if you've not provided sufficient information. So please be sure to provide a response for any section or question with a red asterisk. An example of a question with a red asterisk is the question, is the subrecipient registered in sam.gov? You'll need to provide a response to that because it does have a red asterisk. Once you have all green boxes, you can move forward to the next step, which is simply to certify the data you've entered and hit submit. On the next slide, we have a sample project information page with some important notes. First, for the current period obligations, if there are no current period obligations, you can put 0 instead of leaving it blank. You cannot enter 0 unless obligations and expenditures are also 0. Note that the adopted budget is only required for states, U.S. territories, and metropolitan cities and counties with a population over 250,000 for each project. If that does not apply to you, you can leave this field blank, or the entry must be equal to or greater than the obligation entry. Now, for project description, this example revenue replacement project description was taken from page 53 of the Project and Expenditure Report User Guide. For more information on revenue replacement, including a sufficient description for revenue replacement projects, please see page 51 through 54 of the P&E User Guide. Now, for more information about what constitutes program income and how the SLFRF program treats program income, see FAQ 13.11 and FAQ 17.21 of the SLFRF FAQs. Now we'll go through some common questions. One common question we've received is, are revenue loss funds automatically obligated? The short answer is no. Revenue funds are not obligated automatically. All SLFRF funds under any eligible use category are subject to the obligation requirements, including those under the revenue loss category. Neither electing the standard allowance nor reporting calculated revenue loss establishes an obligation for those funds automatically. Recipients must also report revenue loss projects through a two-step process, which we'll detail on the next slide. Now, please note that revenue replacement category has no requirement for subrecipients, subawards, or expenditures for EC6 projects. All other expenditure categories do have this requirement. So how do you report revenue loss projects as obligated. Step 1, as I mentioned, is reporting that claimed revenue loss. You can either elect up to the $10 million standard allowance or calculate the revenue loss according to the formula provided in the 2022 final rule. Step 2, which is very important, is report projects under the expenditure category 6 or EC6. To do so, you can create one or more projects at the project overview section of the report. You can select EC6 in the pop-up when you create the new project and complete the required information, including project description. And you can enter multiple projects if needed, or a single project. Ensure the sum of the amounts reported under EC6 projects match the total amount reported in the recipient specific section of the report for revenue loss due to the COVID-19 pandemic. A project or projects must include the amount of SLFRF funds budgeted, if applicable, as well as the amount of SLFRF funds obligated, expended for that specific projects. And then the project must also include a description that summarizes the project in sufficient detail to provide an understanding of the major activities that will occur. I'll note that if the project is reported under a different expenditure category, Treasury will not consider the project to be under the revenue loss eligible use category, which is EC6. And therefore, the project will be subject to the detailed programmatic requirements associated with the other expenditure category. Recipients need to also complete step 2, reporting projects under the expenditure category 6. And this sample report demonstrates this common error where people don't take a step 2. You can see that here they've reported total obligations as 0. As with any other SLFRF funds, they must obligate funds to be used under the revenue loss eligible use category, and they have to report those obligations to Treasury through reporting on individual projects or projects in expenditure category 6. The total amount recipients report as obligated is the sum of the obligations across each individual project. You can do a quick check to see if this error is in your report by downloading a report and reviewing the last page of the PDF file to check your total obligations as previously reported to Treasury. Now, next we'll review some common errors where we've received recipients encounter. These and others, other errors are all addressed in the self-service resources. And for the link to that, please see the chat. The first error we'll cover today is when recipients can log in, but they cannot see any reports. So this may indicate that you may not have the correct viewing permissions to see your community's report. To correct this, you'll need to be added to your account, your community's account with permission as an account or reporting administrator or an authorized representative. The account administrator for your community would need to make any updates to points of contact or roles within Treasury's portal. And if you're not the account administrator, then you can reach out to that individual and request that they follow the steps outlined here. Now, if you are the account administrator or would like to become the account administrator, then you can log into Treasury's portal via login.gov or id.me. Click on the 3 horizontal lines in the upper left-hand corner, click on the account, and then click into the account-specific link. To designate the account administrator, the current account administrator must go to the certification on the left-hand slide to enter their name and submit for the designation form to present itself. In the designation section, the current account administrator can update user roles and add or delete points of contact. You can select the designation form on the left-hand side. From there, the account administrator can designate the role of any contact or designate new contacts. So once logged into the Treasury portal, the account administrator can add more users by clicking the Add Contacts button. And once users or contacts are added, they'll need to go to login.gov or id.me for their own login credentials. Otherwise, your locality's account identifier must be requested via SLFRF at treasury.gov. And if we go to the next slide, we will cover the email that you should send complete in order to request the account identifier. Please note that any not including any one of these details may delay the process of creating your account and or providing the account identifier. The second error we'll cover today is when you enter into a new project, what do you put for program income? So quick answer here, you don't need to put anything in the program income box if it does not apply to your project. You can review the definition of program income in 13.11 and 17.21 of our SLFRF FAQs. Now, the third error, which we've seen a lot, is when you need to move boxes from yellow to green. So this can be due to a variety of issues, but the most common is if the sum of the dollars obligated or expended in your projects is over your total allocation amount. So please verify if this is the case, and if so, you'll need to adjust one of your projects by reducing the total adopted budget, the total cumulative obligations, or the total cumulative expenditures for one of the projects to reduce by the amount necessary to ensure that the sum of your dollars obligated or expended in your projects is no more than the total allocated amount. So step one would be to check your allocation amount on the recipient profile page on the left-hand side of the screen after you log in and view your report. Step two here is under your project overview tab, check the projects you've submitted and select the one you can adjust by clicking on the check box under project status. The edit project tab will then open for that project, and you'll need to check the adopted budget and the other items highlighted below. Each of those items can be reduced by the amount it showed you were overbalanced, so that that you reduce the amount as shown as over the allocation amount. You'll likely have to reduce the adopted budget, the total cumulative obligations, or the total cumulative expenditures. Now, on this error, I also wanted to note that our team is currently hosting office hours to assist recipients in that submitted P&E reports with some common reporting errors such as this one. If you're having this specific technical difficulty with reporting your projects due to incorrect obligations and expenditures reporting, you're welcome to join these office hours whether or not you've already submitted your reports. The link to the Zoom for each of these sessions is in the chat now. Specifically, the error that we would like to cover on to focus on during these office hour sessions is an error where obligations or expenditure boxes are yellow. For example, the question, I have added all of my projects, but I can't seem to get my obligation and expenditure status to check off. The boxes are still yellow, but the current period obligations and current period expenditures are filled in with the amount in the total. That would be a great question to ask during these sessions. So if you do have that question, I would encourage you to save those links to join and join at the time of the session. Another error we want to cover is Treasury portal requests locality account identifier, but when you don't know that account identifier. So quick response here. In order to log into Treasury's portal using your login.gov credentials, you'll need to verify the postal code of your locality and provide your community's account identifier. Your existing account administrator can add you as a point of contact directly, or you can request that your community's account identifier from SLFRF at treasury.gov, so long as you provided all of the individual and community information that's listed here on this slide. Now, please be aware that we do have one-on-one help desk resources available to provide you support. We know that many of you have been utilizing our inbox at SLFRF at treasury.gov to resolve questions, and we'll encourage you to continue to use that email, including sharing screenshots of the errors that you are encountering with enough detail to help us provide a sufficient response. Those details and screenshots may help us address the issues that you are flagging for us. A quick note here also, in March 2025, we're aware that many recipients experienced trouble submitting reports and were unable to make contact with Treasury. This was due to unanticipated cuts to a contract with the service provider, and while that contract has been partially restored, it is at a lower capacity, and Treasury expects that there will continue to be a backlog for technical support questions from recipients through and beyond April. We also wanted to let you know that Treasury's call center is also back online after a brief disruption in service, and we're working very diligently to help recipients resolve their access issues and other issues that they're flagging. Moving along, in this section, we'll walk through important general background reminders and some new resources for success to help you complete your reports. We'll also have a demonstration showing you how to navigate the portal and complete your 2025 annual or quarter one P&E report. Now, all governments that received funding from the State and Local Fiscal Recovery Funds program have compliance and reporting responsibilities that are set out in your financial assistance agreements, as well as the SLFRF rule, the compliance and reporting guidance, and that includes the requirement to submit periodic project and expenditure reports, which we're covering today. As a reminder, all SLFRF funds under every severin of the eligible use categories must have already been obligated by the December 31st, 2024 obligation deadline. Treasury recently notified all SLFRF recipients that Treasury intends to vigorously monitor recipients' methods of obligating funds by that December 31st, 2024 deadline, and also that Treasury is committed to recouping funds used in violation of rules and guidance for the SLFRF program. You can find this notice regarding compliance and reviews and related recoupment efforts posted on the SLFRF webpage and by clicking the link provided in the chat. Now, for the expenditure deadline, the 4 eligible use categories described in the 2022 final rule, including the revenue loss eligible use category and the emergency relief from the natural disasters eligible use category described in the 2023 interim final rule, those all have an expenditure deadline of December 31st, 2026. Now, funds used for surface transportation or Title I projects must be expended by the September 30th, 2026 deadline, which is a little bit earlier than the December 31st, 2026 expenditure deadline for all of the other eligible use categories. The deadline, just want to reemphasize, to obligate all SLFRF funds was already passed, and it was December 31st, 2024. Recipients are required to return to Treasury any SLFRF funds that were not obligated by that deadline. More details around returning funds will be discussed later in this webinar, and instructions on returning unobligated funds have already been provided to quarterly reporters and will be provided to annual reporters after the April 30th reporting deadline. Annual reporters report funds that were obligated by December 31st, 2024 in the project and expenditure report that will be submitted today. And quarterly reporters were required to report obligations as of the deadline of January 31st, 2025. Now, subrecipients were not subject to the December 31st, 2024 obligation deadline. The obligation deadline applies to the recipient of the SLFRF funds, and neither subrecipients nor contractors need to take any additional steps to obligate SLFRF funds after entering into a subaward, a contract, or a similar transaction that with that recipient. This is detailed further in FAQ 17.18. Now, one important clarification that we do want to make, and where we've received quite a bit of questions, is that all SLFRF funds, including those reported under the revenue loss category, must have already been obligated by that obligation deadline. We've covered this earlier in the presentation, but reporting revenue loss projects as obligated is a two-step process. Step one is for the recipient to report the amount of revenue loss that they're claiming, whether between claiming up to the $10 million in revenue loss under the standard allowance or by calculating revenue loss according to the formula provided by Treasury in the 2022 final rule. But that alone is not enough to report an obligation. Step two is very important, and where we see some recipients miss. Under step two, the recipient must report one or more projects under expenditure category 6. Those projects must include the total amount of SLFRF funds obligated and expended for that specific project under the revenue loss eligible use category. There are 2 links in the chat for your reference on revenue replacement. The first is a resource that details everything we've covered on revenue replacement, including this common error. And the second is a technical demonstration on how to properly report funds obligated for revenue loss projects. For those 2 links, you can see the chat section of the Zoom. Annual reporters that would like to update their revenue loss determination will be able to do so through the April 2025 reporting period. Revenue loss amount updates can include changing from the standard allowance or from the calculation. And upon any update, any prior revenue loss election will be superseded. I also want to note, because I've seen a few questions in the Q&A about this, that the revenue replacement category has no requirement for subrecipients, subawards, or expenditures for EC6 projects. All other expenditure categories do have this requirement. Now, this part is important. All SLFRF recipients must submit project and expenditure reports quarterly or annually to Treasury, depending on the size of their SLFRF allocation. You're encouraged to review the full compliance and reporting guidance for the SLFRF program, which is linked in the chat, and you can see the cover of here on the screen. You can also refer to the latest project and expenditure report user guide for a step-by-step guidance to submit your SLFRF reports. You can refer to this as you complete your report. You can also refer to the SLFRF self-service resources for common questions related to the program, including reporting. All of those resources are linked in the chat for your reference. Now that you know the how of your report, you'll need to know the where of your report, as in where to submit it. And you'll do that through Treasury's reporting portal. You can access the report on the webpage titled Recipient Compliance and Reporting Responsibilities and look under the Using Treasury's Portal section. You'll need to choose either the login.gov or id.me link, depending on which account your organization has. For more information on id.me and login.gov, please see the explainer videos, which are now linked in the chat. And in the invitation, we also included instructions on how to gain access and sign into the portal. Now, if you've not already done so, please log in as soon as possible to the portal to follow along with the tutorial that we'll provide in just a moment. As you have questions, feel free to submit those as we have our team ready with some responses. This is a perfect chance to follow along and ask questions in real time, and it may be especially helpful if you have more more technical questions as you navigate through the portal. So I would really encourage you to log in now and access the portal so you can follow along during this demonstration. That being said, this is my colleague Stephanie Johnson, who will provide the portal demonstration. Thank you.
Hi, everyone. My name is Stephanie Johnson, and I'm the lead data and reporting analyst for SLFRF. Today, I wanted to go over the process of submitting the 2025 report. To do this, you must first log in to id.me or login.gov. Once you've entered the portal and you navigate to this screen, there are some options for you. I wanted to point out up in this left-hand corner, you can select your account. By selecting your account, you are able to make adjustments to the POCs associated with your jurisdiction. You can update their information, you can remove or add POCs, as well as change their roles. From there, you will want to navigate to your compliance report section. From there, you will have information regarding your prior reports submitted, as well as any that are currently due. To help navigate this screen, you can use this helpful legend on the right side. If there is a blue pencil icon, that means that that report is available for editing and requires additional information. For the blue eye report, this is a report that has already been submitted and you're able to view it online. You can also use the download icon to download the information of previously submitted reports. For the purposes of this demonstration, we are going to look at the information that is going to be in the annual report for this period. You can navigate to that by identifying the report name, the report type, the report period, as well as the deadline for the report and the status of this report. Once we enter the portal, you'll be taken to the Introduction and Bulk Uploads template screen. Here you are able to scroll down to the bottom and identify the areas that you may need to the .csv bulk upload templates or the Excel version of the bulk upload templates. Also, on the right side of the screen, you will see some additional information regarding this reporting period. The current status, because we've entered the report, is now in progress. The name of the report type, the report period, the reporting start and end date. For annual reporters, the starting of the reporting period is for April 1st, 2024 through March 31st, 2025. For quarterly reporters, the reporting period is January 1st, 2025 through March 31st, 2025. The submission deadline for both reporting types is April 30th, 2025. You will also see your allocation amount listed. This is the amount that this report will be covering. You will also see a newly entered screen that shows the income earned. This is a calculation formula that is based off of the information that you are entering throughout the report, based off of self-identified program income earned. Next, you'll want to navigate to the recipient profile screen. In the recipient profile screen, you'll see pre-populated information based off of the information we have. If you scroll down, you will see that there is additional questions in this section. One is to update either your previously responded to UEI or if it is blank, you can update your UEI. Next, you will also see if the question regarding if the recipient is registered in SAM.gov. This is a yes or no question. If you answer no, however, you will have additional questions to respond to based off of your jurisdiction. For the demonstration purposes, we are going to say yes, the recipient is registered in SAM.gov. And lastly on this screen, at the bottom, you'll see your point of contact list. These are all of the POCs associated with your jurisdiction. You can see their name, title, phone number, email, as well as the roles they have. However, you cannot make any edits to this information on this screen. You must navigate back to the home screen and select those 3 lines and enter in through your account. Next, we're going to go to the project overview section. In the project overview section, if you scroll down, you will see a summary of the information that has previously been entered on prior reports. It will tell us the number of projects, total adopted budget, total obligations listed, total expenditures listed, as well as a calculation of the remaining funds that will be lost if not obligated by December 31st, 2024. In the reporting period for the annual reporters for 2025 will still be reporting the obligations that took place in and before December 31st, 2024. Quarterly reporters in Q1 2025 will no longer be reporting on obligations that took place during this period. In this next section, you will see the total obligations reported by Q4 2024. For quarterly reporters, this is the cap. This is the amount that you had identified in your Q4 report as total obligations that took place prior to the obligation deadline. For annual reporters, this is an amount that is currently adjusting based off of your entries in this reporting period. Next, you will see a question. This question only applies to quarterly reporters that did not submit their Q4 2024 report. This is if a recipient failed to report their report in Q4 and was administratively closed. They do have the option, if they were impacted by a natural disaster, to select that option. This only applies to those that did not submit the Q4 2024 report. If this does not apply to you, do not answer this question. Next, you will see another question asking up to and including this reporting period, have revenue replacement funds been expended for the government services and reflected in the projects below? It's a yes or no question. Because the projects we have below do have expenditure category 6 for revenue loss, we are going to say yes. The next question is reflecting upon this remaining amount. The recipient has reported obligating $96,000 of their SLFRF allocation amount. $4,000 of that has not been reported as obligated. When completed, this report should include all obligations through December 31st, 2024, as discussed in FAQ 17.2. Any SLFRF funds that were not reported as obligated in this report will need to be returned to the Treasury. Now, the question is, if the recipient attests that they understand that the $4,000 is not reported as obligated in this report and will need to be returned to the Treasury. Because we will be creating a new project to use these funds, we will say that that is not true, and we are going to add a new project. As you scroll down, you can see the current statuses of existing projects already in the report. When you go into a new report every reporting period, you will need to go into your project status for every project and update the current period obligation and expenditures. If you have other changes to make in the cumulative amounts, you will also reflect these in that section. But because we are adding no new obligations or expenditures to this project, we would enter the number or the amount of 0. This field is blank at the opening of the report. You must go in and enter 0 for these projects prior to moving forward. So we do see that we have a project here that has yellow check marks. We need to make adjustments to these fields. To start off with, you will want to review the project status. In here, we are reflecting that we have obligations of $25,000 and cumulative expenditures of $25,000. And we are showing that there are $0 in current period obligations and $0 in current period expenditures. From there, we will start by looking at what our obligation status looks like. Based off of our cumulative obligations in the project status, we say we have $25,000. However, based on the system entries, it's showing we have $50,000. And we can see those reflected in the less than $50,000 expenditure screen. We have 2 entries for $25,000 when we should only have 1. Also, we can look at the current period information. In the current period information, we are reflecting that we have also updated amounts in this section. And again, you will want to do the same exercise with your cumulative expenditures and your current period expenditures. Once we have identified that issue, we know we need to go to the expenditure screen. From there, we can see our project listed below. We see that there was a prior entry, and then we can also see that there is a current period entry in this white line here. There are 2 ways to edit this. Because it is a current period entry, you can go in and hit delete expenditure. However, I'm going to show you how to remove this expenditure if it was a prior period entry. And so what you want to do is enter the project name, PEST 2. As information populates, you'll want to re-enter the information associated, and we are going to put negative $25,000 in each section, and we're going to create this expenditure. We did get a green checkbox, and now we are showing for this project, we have $25,000 of total obligations and $25,000 of total expenditures. So when we go back to our project overview section, and we scroll back down, and now we can see we have green check marks. That means we have fixed the issue that was identified by the yellow check marks. We still do have to create a new project for this $4,000. To do this, we're going to add a new project. We're going to select administrative, and we're going to do this as test 7.1, and then the recipient project ID is something set up by the recipient. We're not going to enter an adopted budget for this project. And then you are going to list your total obligations and total expenditures. We are saying that we are fully obligating and fully expending this project prior to 2024 obligation deadline. And because we're reporting it in this reporting period, it will also be included in our current period obligations and expenditures. In this section, you would enter any program income that had been earned or expended prior to 2024. In the below section is obligations that have been taken place after the 2024 deadline, as well as expenditures for the 2024 deadline for the program income. Next, for the project, we are going to show that this project is completed, and we are going to enter in the project start date as well as the project end date. Also, you'll want to make sure that you are including a project description as detailed as possible. Okay, now we are adding our project. As we wait for the project to replicate, we can see that we have the scenario again with the yellow check marks. This is because we have entered $4,000 in the project status. However, we have not entered that $4,000 into the other sections of the reporting portal. So to do that, we will again need to go back to the expenditure section because it is a less than $50,000 obligation. And we will need to pull up the new project and the information will populate. From there, we will do our enter information, and it is $4,000 obligations and $4,000 for expenditures, and we will create this new entry. And now we have the new entry created. Now, when we go back to our project overview, we will see that we have all green check marks again. From there, we are showing that we have fully obligated all of our funds. And we want to continue through the reporting tabs to make sure that all other sections have been fully completed. You always want to make sure that any question that has a red asterisk, there is a response to. It always is good practice to make sure that you have these fields completed. Lastly, you'll navigate to the certification section. From there, you'll get a project overview status. Again, if you had any errors of different colored check marks, they would show up in this section of incomplete below, and that would tell you to go back to your project overview section to make those updates. Also, you will see all the complete projects listed. You will have a summary of all of the information you have entered, and this amount is now updated to 0 because we are showing that we have obligated our full allocation amount. Again, your allocation amount is located on the right side of the screen. You will also have additional information regarding the number of projects you have in this section. Next, you will have to answer some questions regarding the Federal Audit Clearinghouse. This is if you have expended $750,000 or more in federal awards during the most recent completed fiscal year, if that fiscal year ended before October 1st, 2024. If your most recent fiscal year ended on or after October 1st, 2024, have you expended more than $1 million in federal awards? This is a yes or no question. If you answer yes, there will be follow-up questions. However, we did not, so we will answer no. Next, you will have the alternative compliance examination engagement. Here, this is for recipient entries expending more than $750,000 for fiscal years ending before October 1st, 2024, or $1 million for fiscal years ending on or after October 1st, 2024. They are now subject to single audit requirements. Together with the Office of Management and Budget and other stakeholders, we developed the Alternative Compliance Examination Engagement. For qualified SLFRF recipients, the ACE is a voluntary alternative to required full single audit that is less burdensome but still upholds good stewardship by focusing on activities allowed and unallowed and allowable cost and cost principles. For this section, I do want to highlight, if you are uploading an ACE, you must answer yes to all of these questions for the ACE portal to be generated for you. You will be able to access the ACE portal by either this hyperlink on your report or in the same section where you went to complete your compliance report. If you go to the introduction tab, you can scroll down and you may access the ACE that way, or there may be a new section for you on the left side of your screen. For the purposes of this demo, we are saying yes, we would like to submit an ACE. Lastly, you're going to want to read through your statement of certification, and you are in the role of authorized representative for reporting and the submission of this record and certifying and submitting this report on your jurisdiction's behalf. You will see your information populate in this section below. And then once that is there, you can select certify and submit. And once that is done, your progress will update to a submitted status after your report has saved. From there, we ask that you please fill out the survey based off of how we are doing, and you can submit that survey. And once you are done, you can go back to your compliance records and look up your report, and you can now see that it is in a submitted status. You can still view and download this report. And again, this is also the area where you will be able to access your account to update any information. And that is all we have for today on the demo. Please follow up with us if you have any questions. Thank you.
Thank you, and I hope that that demonstration was helpful. If we could bring up the slides again, I'm going to turn it over to my colleague from the compliance team to discuss the non-compliance process. Thank you.
Hey, thanks, James. Hey, everyone. My name is Kira, and I'm an SLFRF compliance analyst. And as a part of the compliance team, we work closely with other parts of the SLFRF program team to ensure that the program priorities met and critical risks are mitigated. Today, I'll speak with you about a few things. So first, we'll talk about the recipient's responsibility to ensure accountability and stewardship of their SLFRF award funds. What happens when a recipient doesn't submit their 2025 annual or quarterly report, how to access and view non-compliance notice in the portal, and how a recipient can get back into compliance. Please continue to submit your questions related to this topic in the Q&A box. As a reminder, we're not addressing topics outside of the scope of this webinar. So for those questions, feel free to email slfrf@treasury.gov. Okay, so to start off, we're going to talk about recipient responsibilities. By accepting the SLFRF award, the recipient agrees to take responsibility for complying with the terms and conditions described in the financial assistance agreement. As stated in the financial assistance agreement, the requirements of the uniform guidance generally apply to the SLFRF awards, and these requirements flow down to the subrecipients. There are, however, some exceptions to the applicability of the uniform guidance, particularly related to the revenue replacement expenditure category. So you can find additional information about this and the SLFRF frequently asked questions document under question number 13.15, as my colleague will paste in the chat. In this way, recipients of the SLFRF funds are responsible for good stewardship of the awarded federal financial assistance. And part of being a good steward is submitting your reports in a timely manner and accounting for costs incurred. Treasury has posted many resources to guide SLFRF recipients' compliance with reporting requirements at www.treasury.gov/SLFRP reporting. A few of them are highlighted in the box on the right-hand side of this slide. So what happens when a recipient is non-compliant? For example, they don't submit a report, or they obligated or expended funds to an activity that is not an eligible use. When this happens, generally we first conduct outreach via information document requests, also known as IDRs. We send emails and even phone calls to those listed on the SLFRF portal as recipient contacts. This is yet another reason to make sure that your contact information is up to date. We have covered IDRs in previous webinars, so please reference the link in the chat for more information on those. If after this outreach is conducted, the recipient still does not resolve the noncompliance, we will issue a notice of noncompliance to the recipient. The notice of noncompliance will be sent through the Treasury portal, and the recipient will receive notice that they have an important message in the notification center. You can see what one of these notification notices of noncompliance looks like in the notification center on the right-hand side of the slide. We take a cooperative approach in supporting recipients' compliance with the terms of the SLFRF award. Where feasible, we'll continue to conduct outreach to recipients that receive these notices of noncompliance with the goal of helping to resolve the instance or instances of noncompliance. However, if the instance or instances of noncompliance continues to be an issue, then Treasury may take additional actions. This may include initiating recoupment, where Treasury would send the recipient an initial notice of recoupment, which serves as the first formal written notice of the amount subject to recoupment, along with an explanation of those amounts. This notice will provide an opportunity to request reconsideration and also generally provide the recipient with an opportunity for remediation. These initial notices of recoupment generally will be distributed via both email and postal mail. So next up is accessing the noncompliance notice. Treasury sends an email to notify the recipient's points of contact that an important notification regarding compliance in the SLFRF program is available for review. The email includes links to the Treasury's portal to access and view the noncompliance notice. Once logged into the Treasury's portal, you can view the noncompliance notice by clicking on the 3 horizontal lines on the top left corner of the screen and selecting notifications. If your jurisdiction participates in multiple Treasury programs, you may need to scroll down to view the notices associated with the SLFRF program. You can see example screenshots of what one of these sample emails looks like, including how to access the noncompliance notice via the notification center on the right-hand side of this slide. Now, this is the key part, resolving recipient noncompliance. It is imperative that you review the notice of the noncompliance notice as soon as possible to take the necessary steps to provide the necessary documentation or requested information to Treasury. Once the outstanding compliance report has been submitted, or once the additional details or requested documentation has been provided and reviewed by Treasury, we may consider the noncompliance resolved. As a reminder, throughout this process, recipients must continue their regular reporting cadence. Okay, so now we're going to turn to the noncompliance recoupment process. These steps align with the final rules section codified in the Code of Federal Regulations, CFR 31 CFR 3510-recoupment. A link to this has been added in the chat for your view. There are several steps to the recoupment process, as you will see here in this slide. So first, we're going to start off with the left-hand side column. That's the steps that are always applicable. So Treasury will always send an initial notice of recoupment for noncompliance. The initial notice will provide a date by which a recipient may request reconsideration of the recoupment. This date is generally 60 days from when the recipient receives the initial notice. Treasury generally also provides an opportunity to come into compliance before finalizing the recoupment. The initial notice will explain that if a recipient does not request reconsideration or come into compliance as applicable by the deadline, repayment will be due, generally 120 days from when the recipient received the initial notice. So the second column is steps applicable if the recipient does not request reconsideration or come into compliance by the deadline. So if a recipient does not request reconsideration or come into compliance by the deadline, it must repay funds by the deadline stated in the initial notice. This deadline is generally 120 days from when the recipient received that initial notice. Treasury will provide a final notice of recoupment confirming the recoupment and deadline. Generally, Treasury sends the final notice within 60 days after the deadline passes for the recipient to request reconsideration or come into compliance. Okay, so the final column these are the steps that are applicable if the recipient does request reconsideration or come into compliance by the deadline. Treasury will review the request for reconsideration. After review, Treasury will send the recipient a final notice of recoupment, either confirming, modifying, or even withdrawing the recoupment action. Treasury will generally send this final notice within 60 days after the receiving the recipient's request for reconsideration or being notified of its compliance. If the recipient still owes funds, the final notice will provide a deadline by which the recipient must repay those funds. And this deadline is generally 120 days from when the recipient received the final notice. So what happens if there's continued noncompliance? When a noncompliant recipient doesn't resolve an instance of noncompliance, such as continuing to not submit a required report, Treasury has a number of remedies it can use to resolve this situation. These include, but are not limited to, terminating the SLFRF award, requiring the return of SLFRF funds via recoupment, and even reporting the recipient to SAM.gov. Based on the continued noncompliance, a recipient's future ability to receive federal financial assistance may be hindered due to not complying with the terms of their SLFRF award. Okay, so now it's time to review. We've covered the following main topics in this non-compliance section. Number one, your community is responsible as a steward of federal funds. Number two, if you continue to have instances of non-compliance, Treasury is required to take action to remedy the situation. As mentioned earlier in the notice to recipients on compliance reviews and related recoupment efforts, Treasury intends to take several actions in alignment with its commitment to recoup and recapture funds to ensure taxpayer funds are used in accordance with program requirements. This underscores how critical it is for recipients to submit their 2025 annual or quarterly reports due by the April 30th deadline, that's today, and to remain in compliance for the SLFRF program. My colleague will provide the link to this notice again in the chat. Again, if you have any further questions regarding noncompliance, please utilize the Q&A function for these. That is all for me today. So now I'm going to pass it on to my colleague to discuss the return of funds and the debt collection process. Thank you for your time.
Good afternoon, everyone. In accounting operations, we assist the program team when it is determined that return of funds is necessary. We also have the duty to pursue debt collection for Treasury's SLFRF program for any unpaid balances, including those due to noncompliance, unobligated funds, and/or program closeout. Today, I'll walk you through how to return funds using our preferred payment method, pay.gov, and also discuss the debt collection process, which comes after all the noncompliance outreach notices and recoupment processes you've just learned about. As we said before, please feel free to ask payment and debt-related questions in the chat and direct questions you have that are outside the scope of the webinar to slfrf@treasury.gov. Now, if Treasury determines that your organization must return funds, a notice of recoupment or notice to return unobligated funds will be shared with you by email and/or mail, as Kira mentioned. The payment method described on these notices is an easy-to-use, secure online platform operated by Treasury called pay.gov, which you can see on this slide. The SLFRF program has 2 dedicated sites within pay.gov, allowing for your organization to remit secure payments via debit card, PayPal, ACH debit, or ACH credit. The required data fields for this form include your SLFRF recipient number, which can be found on your recipient report, your entity's name, and your contact information. If you're returning funds associated to a debt, you will also need to provide the invoice number, which can be found on the demand letter we'll talk about in a moment. By using this pay.gov form and providing your recipient number, Treasury can easily identify, track, and process your return in an efficient manner. 2 quick tips if you choose to pay via ACH debit or ACH credit. Returning funds via ACH debit, you may need to contact your bank beforehand to have a debit block lifted from your bank account. This block is a security measure designed to prevent unauthorized transactions. When reaching out to your bank, inform them that Treasury's company ID, which is listed here on this slide starting with 2001, that company ID is authorized to process an ACH debit to your account for the return of funds. If instead you opt to return funds via ACH credit, you will need to complete the transaction at your bank. So first you enter all the details in the pay.gov form, and then you print out that form and take it to your bank to finalize the transaction. We've had great results using pay.gov for many other Treasury programs. They have excellent customer service if help is needed, and the SLFRF program staff is always available on standby. If for some reason your organization cannot return the funds via pay.gov, we do have the limited availability to accept Fedwire payments, though it is not preferred as it comes with longer processing times. In this case, please reach out to the SLFRF program team for more information. If a recipient is subject to recoupment and does not return funds by the applicable deadline, Treasury has a duty to pursue formal debt collection, which I'll walk through next. Imagine, if you will, that Treasury has determined your organization owes a balance and the payment has not yet been received through the compliance and recoupment process. In this case, formal debt collection must begin. This one-page graphic is a representation of the timing of your federal debt and daily increasing interest, penalty, and fees that are charged. At the top with the arrow, we have an example case of an organization that owes $100,000 to Treasury, so that you can see how quickly that balance changes as each phase of debt collection continues. Turning our attention to the left side in the gray box, you see the pre-debt phase, which is essentially where the compliance team left off. If a recipient is subject to recoupment and does not return funds as required by the deadline, Treasury will establish a debt and issue a demand and due process letter. This demand letter is sent on day one. This demand letter marks day one, really, of the debt collection process, and it's sent by both mail and email. A 5% interest, which is the current value of funds rate, and a 6% penalty begins to accrue. But the organization can pay back the balance in the first 30 days, interest and penalty free. The interest doesn't begin to be added to your balance until day 31. Also on day 31, a past due notice is sent via email and mail. Around day 60 to 90, Treasury will begin making outbound phone calls to your organization to try to engage and resolve the debt. Interest continues to build, and at day 60, a $25 administrative fee is added. On day 91, the 6% penalty begins to be added to the balance and continues daily. There's also another $25 fee, but more importantly, around day 91, the debt is referred to Treasury's delinquent debt management service. When this referral happens, a much larger 30% administrative fee is added on top of the principal, interest, and penalty that continues to accrue. The delinquent debt management service will then issue its own notice of collection action. While delinquent with this group, several actions may occur, including but not limited to private collection agency referral, automatic offset of future federal payments, and ineligibility to receive future federal funds. You can see with the balances in the example that before referral to delinquent debt management at day 91, the balance does not grow substantially. For this reason, we highly encourage all debtors to take advantage of that first 30 days interest penalty-free payment window, or pay in the pre-debt phase before any of these additional charges begin. The box at the bottom is meant to just stress and show some of the actions as a debtor you can take while in federal debt collection. These include full or partial repayment, disputing the debt if you have proper documentation, requesting proof of debt documentation, requesting a compromise of the debt, or requesting to pay the debt over time by monthly installment. If an installment agreement is in place before day 60, your organization would only pay accruing interest and a small maintenance fee. If it's in place before day 90, prior to the delinquent referral, your organization would pay any accrued penalty and then continue to pay interest and a small admin fee. These installment agreements are generally constrained within a 3-year timeline. On this next slide, I'll just go over it very quickly. We want to share and reiterate the legal requirements and communication that debtors receive. Collection of federal debt is legally mandated and must occur within strict timelines. Most of the parameters we're talking about today are not negotiable by SLFRF as they're federal-wide standards, including the assessment of interest, penalty, the need to serve due process, and the referral to delinquent collections after 90 days. Below, you'll see sort of a screenshot of each of the letters I described in the previous section and a very small recap of their purpose. The last few takeaways, really, number one is avoid federal debt collection in so much as possible for your organization. If you know a balance is due from for non-compliance or closeout, pay this balance timely to avoid any and all interest, penalty, and escalating fees. Pay.gov is a secure online portal to return funds to Treasury via debit card, PayPal, ACH debit, or ACH credit. Federal debt collection is mandatory and cannot be delayed once a debt is determined. By 91 days, charges of over 30% could be added to the initial balance and continue to grow with each passing day. If your organization does find itself in federal debt collection, a couple final tips. Ensure that the SLFRF program team has your correct and updated mailing address, as well as the best point of contact's email and phone number. Only one point of contact can be assigned per debt. If your organization has financial concerns and cannot pay the debt in full, payment by installment is a possibility upon request and review of financials. Thank you so much for your attention to this important topic. With prompt return of funds using pay.gov, we hope debt collection is not something your organization will encounter, but it is a very real consequence you should be aware of. I will now pass it back over to my colleague to wrap us up for today.
Thanks, Tiffany. Okay, so as a recap, today we've reviewed some of the key information on the SLFRF program. We've shared some resources for the 2025 annual and Q1 2025 project and expenditure report, and we provided a portal walkthrough. We also provided an overview of the non-compliance and recoupment process, as well as the debt collection process. On the screen here is a list of some of the key resources we highlighted throughout the presentation, which my colleague will provide again in the chat. This includes the compliance and reporting guidance, the SLFRF self-service resources, the SLFRF frequently asked questions, and the latest project and expenditure report user guide, as well as the link for login.gov. Now, I am going to pull up the poll again. If you could just take another minute to respond to those questions. Thank you. Okay, it looks like the poll is ended, so I'm going to actually relaunch the poll so that you have sufficient time to provide your responses. Apologies for the technicality there. And I'm just going to give another 20 seconds or so please wrap up your responses now. Okay, thank you all. I am sharing the results now. As you can see, we've seen a lot of movement, especially in the not at all confident category, which I'm very pleased to see. The responses at the beginning of this webinar fell in between not at all, a little, and moderately, and now they seem to be between a little, moderately, very, and highly. So we've seen quite a bit of movement there. I'm glad to see that the resources seem to have helped. After this webinar concludes, you may refer to the SLFRF website under the News and Program Updates section. There is a link to to the webinar materials that we've shared in the chat for your reference after this webinar. Our second question, it looks like the vast majority of you responded the correct answer there as well, which is April 30th, 2025. That is 99% of you. And then for the third and final question, I see that zero participants responded incorrectly, and 100% of our participants responded correctly. So do you need to submit a report even if you've expended all of your SLFRF funds? You are all correct there. You will need to submit a report. The answer is yes, and you'll need to continue to do so until award closeout is initiated in the portal. We'll now walk through some of the questions that were submitted directly by recipients with my colleague Mira. Before we start, though, I know we've received a lot of questions today. We have a moment to go through a few of those Q&A right now, but because our time today is limited, I wanted to let you know of a few office hour resources to help support recipients in a successful submission of their report. First, as mentioned earlier in this webinar, our program team will be hosting a series of office hours to help support recipients who are experiencing issues with correctly reporting project obligations and expenditures. For example, if your obligations and/or expenditure boxes are yellow. So please refer to the link in the chat for the link to join those office hours and the dates there. And then the second office hour resource is that Dante Moreno of the National League of Cities is also hosting a live office hours immediately after this session at 3:30 p.m. Eastern Time. Our program team often stays on the Zoom after the webinar ends to wrap up some final questions, but I also will have my colleague post the link in the chat to those office hours hosted by the National League of Cities in case we're unable to address your question in this webinar. So with that, we'll start with the first question. Mira, can I read it off for your response?
Yes, I'm ready.
Awesome. Okay, we have quite a bit of folks saying they can't see their reports when they log into the Treasury portal. I know we've covered this account access issue in depth throughout the presentation, but can you go over that information once again for good measure?
Sure. First, recipients should ensure that they are navigating to the correct area of the Treasury portal. So there are two resources I would point you to. One is the How-To Reporting Guide, which shows you exactly how to log into the Treasury portal and is linked in the chat. And the second is the latest Project and Expenditure, or P&E report user guide on pages 6 to 9, which also provides you with step-by-step instructions on how to navigate the outstanding 2025 report that is due by 11:59 p.m. Eastern Standard Time today. One tip I might share is that if you have not already submitted your report, that 2025 report that I just referenced will be in draft status, and you will click on the pencil icon to the right to access that report. Now, if you do ensure you've navigated to the correct area of the portal and there are still no reports viewable under the Compliance Reports tab, that may mean you don't have the correct user role to complete and submit the required report. So we've gotten a lot of questions today, and we've been able to provide a lot of support in the Q&A for this issue. If you don't see your reports under the Compliance Reports tab, that means that you do not have account administrator privileges. So you need to reach out to the current account administrator for your entity to make updates, and they can add you as a point of contact or change the roles within Treasury's portal. To designate an account administrator, the current administrator would go to the certification screen on the left-hand side of the portal to submit their name and a designation form where they can enter and update user roles or delete contacts. Once you're in the Treasury submission portal, you can add more users with the Add Contact button. To deactivate a user, the existing account administrator can edit the points of contact as mentioned.
Awesome. Okay, that's great. Now, one quick follow up. What if they've taken all of those steps and that does not resolve their account access issues?
Great. So to be clear, you've logged into the portal, you've gone to your compliance reports, but you still don't see any reports listed. That means that you need to take one important step, which is that you need to request your account identifier from Treasury. So to do that, please send an email to slfrf.gov with the template that's in the chat, and explain that you need to request your locality's account identifier. That is a unique number. In that email, please be sure to include your full name, your title, your email, your locality's address and state, including zip code, and your locality's EIN or UEI for verification purposes. Again, a very quick way to do this is to have your existing account administrator add you. And I also, any newly designated account administrators should ensure that they have an active login.gov account, which expedites the process of realigning the Treasury reporting portal account for that locality to the correct login.gov account.
Awesome. So now we'll move on to the next question. So some communities have indicated that they've obligated and expended all funds and are ready for closeout. They're wondering when that option to close out might be available.
Great question. So the option to close out is not yet available, but we will be sure to communicate that to all SLFRF points of contact when the option and the associated guidance is made available. Our program has launched a closeout corner of the newsletter to keep recipients and stakeholders up to date on this information. So please do subscribe to the newsletter, which you can do on our website and also via the link in the chat. Please also remember that you must continue to submit reports according to your recipient compliance and reporting responsibilities, including the 2025 report due today, until the award closeout is initiated and completed in the portal.
Terrific. Thanks, Mira. Okay, we have time only for one more question about administrative costs. So what are administrative costs and how should recipients report them?
Thank you for flagging that, James. And we've seen questions come in. So to start, please differentiate between project-specific costs and administrative costs. Project costs are specific to project totals and should be reported there. Administrative costs are a specific, distinct expenditure category. Please see the compliance and reporting guidance, which was just released April 2025 and is in the chat on page 11 for more on administrative costs, which I'll read from here. Administrative costs. Recipients may use funds for administering the SLFRF program, including the cost of consultants, to support effective management and oversight, including consultation for ensuring compliance with legal, regulatory, and other requirements. Further costs must be reasonable and allocated as outlined in 2 CFR 200-404 and 2 CFR 200-405. So you all can find more information in the FAQs at 17.10. That's FAQ 1710 for a non-exhaustive list of examples of administrative costs that are applicable under this expenditure category.
Terrific. Thank you, Mira. That wraps our session today. We hope you found it informative. You can find all the resources we mentioned in this webinar on our website. Specifically, there is a link that was shared in the chat where the resources are compiled all onto one page. Some key reminders: please submit your 2025 report as soon as possible. The report is due today. If we could bring back up the slides, I have the contact information for Treasury's portal. If we could bring back up the slides, that information is slfrf@treasury.gov. If you have additional questions there, then feel free to follow up with us at that time. Again, our team will stay on the Zoom to wrap up some final questions here. But in the case we aren't able to get to them, you're welcome to join the office hours that were hosted previously, that we previously shared by NLC or by the program team. And those links are in the chat. We've shared those just a moment ago. So thanks again for joining, and I hope you have a good rest of your day.